Well, hello again, everybody. This is John Norris at Trading Perspectives. As always, we have Sam Clement, and again, we have Courtney Truss. I'm going to sit here today and talk about some of the things that Courtney has on her mind. Sam, I think what Courtney told me is she's kind of curious about that whole mess over in China about Evergrande?
Yeah. Yep.
The property developer, and how people are all worried about in the United States, and just sometimes doesn't make a ton of sense. Why is what's happening over in the Middle Kingdom? Why do we care about in Central Alabama and places throughout the United States?
Well, I think first off, just the headlines you were seeing around it saying, is this the next financial crisis? Is Evergrande China's Lehman? Headlines like that, I think everyone's going to get kind of scared and want to know what's going on.
Well, whenever you say, is this China's Lehman, that's when people get a little bit nervous because we all know what happened in 2008, and that wasn't a lot of fun. But that I could talk about this forever, Sam. We're going to let Courtney ask away. Courtney, so what's on your mind?
Well, I think you explained it well already, John. Really just looking at, watching the news and seeing, okay, Evergrande is not going to be able to pay their debt. And what does that mean for the U.S. investor?
Do you have any other questions? No, I mean, at first blush, it doesn't make a lot of sense. I mean, if you're just kind of a casual observer of business news and some property developer over in China can't pay its debt, then so what? Why should that impact me? However, the sheer size of Evergrande, we're talking about literally hundreds of billions of dollars, if I'm not mistaken, that they owe to someone. If all of a sudden they can't pay it back, does that cause the Chinese banking system to wobble? And if it wobbles, is it going to slow down the extension of credit throughout China? And if the economy slows down, is that going to cause debt problems throughout the world? So, what happens in China doesn't necessarily stay in China. So it's more of a thought that it was a contagion, sort of like when Lehman failed here in the United States. So what? I don't have any exposure to Lehman Brothers, and a lot of people didn't directly. It's the indirect exposure to Evergrande and its mountain of debt that worries the financial markets.
And kind of a canary in a coal mine, too, I think. Lehman collapsing, a lot of other banks had similar problems to Lehman. So it wasn't just Lehman. Lehman was kind of the tip of the iceberg in a sense. And I think that's part of the fear that you saw here with how reliant the Chinese economy is on real estate, and seeing the largest private property developer in the country going belly up. That's kind of scary. But also you have to just kind of take a look at where our stock market was to start, right as people started talking about.
You're talking about right now?
No, a couple weeks ago.
A couple
weeks ago, we just had this kind of 5% pullback, pretty normal in a market, happens on average every single year. And we were at all-time highs without any sort of pullback in hundreds of days. And so to me, that is an important caveat to how the U.S. market reacted to this.
So you think it was something specific to timing as well?
I think there's times you see in the market where people are looking for things to sell. And as far as what U.S. investors, what a lot of people listening to this are asking, it was they saw their portfolios drawing down. They saw drops in their stocks and wonder, why is this Chinese real estate company impacting a company that I own in my portfolio? And I think that's a lot of it. A lot of times investors look for just about any reason to sell a stock, and I think this was a prime example when we're sitting at all-time highs.
Did that answer your question?
It did. I think, when you think about China, and obviously being a communist country, you think, what do you see the impacts of if they truly do default and not pay back? I know there's a window of time, I guess, that they are given to pay this $669 million for their bond payment. What does it look like for the Chinese economy if they truly do default? Or will they be allowed to?
Well, that's a great question. The Chinese financial system is a little bit more opaque than ours. Their currency is not truly convertible. Foreign investors have limited access to a lot of their financial markets. And the thing is, their money center banks over in China are primarily owned by the central government, either directly or indirectly through sovereign debt, through sovereign funds, what have you. So, for all intents and purposes, Beijing controls the financial system in China far more so than Washington does here. And I'm done by control, I mean in terms of direct ownership. Where not regulations and what have you. So I'm not necessarily as worried about an Evergrande collapsing and having the same sort of financial system contagion, primarily because the Chinese government, both Beijing and at the province level, tends to own much of the financial system. And as a result, I don't think Beijing is going to let itself go under. And if you catch my drift, so I don't lose as much sleep over it. What does concern me though is they probably won't protect the private sector banks quite as much, and that's where you'll see maybe some of the private sector banks. And Min Chang, I think, is the name of one of them.
Yep.
It could have some real issues. So you would have the still healthy government-owned banks in former fashion. They just put some more zeros on the balance sheet or what have you, but then the private sector would be kind of frozen for a period of time, and that means that the government sector in China would again take off at the expense of the private sector. So I think I wouldn't be surprised if that happens, Sam.
No, I mean, I think a good comparison for what the environment's like over there would almost be more like our Federal Reserve being the one who owned a lot of the debt here for this bank. You know, the ones who is actually printing the money and can, help support the entire economy and help support the company itself owning a lot of that debt. It's hard to imagine if I could control a company and keep it from going under and I own that company, me just letting it go under and hurting myself and shooting myself in the foot. And that's kind of what we're going to see here, I think.
Yeah,
So
We're already kind of seeing that. We're already seeing more
Yeah.
cash flooded into the Chinese market.
Yeah, and I have to point out that comparing it to Lehman is probably a little bit unfair because back in 2007 and even today, the rest of the world has more counterparty exposure or more direct risk with the U.S. financial system than I would say our banking system has with the Chinese banking system,
Yep.
or what have you. So like a Deutsche or a UBS or Credit Suisse or Paribas and all that
HSBC
stuff have far more exposure to the U.S. banking system than I would say the U.S. banking system has with the Chinese banking system. Not saying that we don't have any, it's just not at the same level that the remainder of the world had with us in 2007 when we had our problems.
Yeah, I mean, I think that's a good way to put it.
And I think that's a pretty fair way of putting it.
That's what happens when you're kind of the money center for the entire world.
In a lot of ways, I think you're right.
So do they just forgive the debt completely?
Who, the Chinese?
Yes. Like, are they just going to say, like, okay, you just don't pay us back? Or is it like we're going to then create, I mean...
No, I think probably what would happen if they do allow an Evergrande to go under is the public sector banks, or the ones that are primarily owned by Beijing, would come in and swoop in and get the desirable assets for pennies on the dollar, write off the loans as best as they can, and then the authorities at B would give them some money to put back on the balance sheet or guarantee the debt to some level. And the public sector banks, or those owned primarily by the public sector, will be first in line in the capital structure, in my estimation. I mean, this couldn't happen in the United States, but it did kind of happen in the United States in 2008 in some form or fashion. So those will be first in the pecking order. They'll get the assets that they want. They'll get the most of the money back from the loans, and then it's going down and down and down. Those smaller private sector banks, those smaller private creditors, private investors, they're going to be the ones kind of getting the short end of the stick on this. So it'd be kind of like in 2008. Hey, all of our money center banks, they got all their money back.
Yep.
They're doing great, but Community Bank shares XYZ in Tupelo, Mississippi is allowed to go under.
Right.
For the people that own shares of Community Bank Stop XYZ in Tupelo, Mississippi, that sucks. Mm-hmm. And in Tupelo, that sucks. But in terms of the overall U.S. financial system, it doesn't matter.
Just looking at it in aggregate.
Yeah, and look at it in aggregate. So in aggregate, I think the Chinese financial system would be just fine, even if on a micro level, some banks and some individuals and some provinces or cities might get hurt worse than others.
This, to me, kind of seems like a good opportunity to have a wake-up call about investing in countries with this opaque of regulations around their financial system, and especially to foreign investors. You talk about the pecking order. Very low on that pecking order, if not last, is going to be foreign investors.
Oh, without a doubt.
I mean, it makes me think, talking about ADRs and ways that individuals in America and other countries are investing in China and some of these other tighter regulated communist countries. It seems to give me more hesitation now when you see how they're going to end up and who's going to really get their money out of this and who's getting shafted.
Well, particularly the way Xi has been acting recently.
Yeah.
And I just want to throw him out there for all of the CCP. I mean, but President Xi, they're canceling movie stars out. I mean, canceling people like like we can't even do in our society as bad as cancel culture is. I mean, we're talking about these people are removed from Wikipedia, saying what they did about cryptocurrencies. You just can't do it; it's illegal.
Yep.
All that good stuff. Then putting pressure on Hong Kong and
even Macau. I mean,
yeah.
the gambling regulations they're up for another contract next year, and it's going to be a bloodbath.
So Beijing is trying to rein in the private sector a lot more. So, Sam, what are the three hallmarks of any well-functioning economy, that we say here?
Well, rule of law is the big one.
Yes, I like that. And strong individual property rights and the development of human capital.
Right. I think they're probably doing fine on human capital.
I think they're doing probably pretty good on that. The first two, however,
those are the areas for concern.
Yeah, I think we have real big areas for concern. And so when you're not seeing those two, particularly in a country where the government and where a strong president can pretty much make the rules up as they're going along.
Well, and I think something that's interesting that we've seen about investing in the Chinese market is just how much people just look at how quickly the economy's grown over the last 10 years.
Yeah.
But the way they're set up, we've talked about it time and time again, the opaqueness of it, the property laws, it's not set up for stockholders and to be rewarded for
particularly like international
especially international stockholders. But the GDP growth in China has been phenomenal for decades.
Yeah.
But can you really trust that? I guess that's what I go back to. Like, I'm probably the most risk averse person in this room, and to me, you're kind of, y'all are saying it without directly maybe saying it, but how do you trust anything coming out of a communist country? You said that their currency is not truly convertible.
Mm-hmm.
Okay, well, why? Because you don't trust that they're reporting, accurate figures back to you. So, how does that work with?
Especially on the individual company level, I think GDP is something that's a little more verifiable in terms of exports and all that. But that's kind of my point is people are investing in companies and not really knowing what they're investing in. The auditors there are continuously not, pushing back on Chinese companies and sales numbers. And we've seen time and time again, it seems like almost a yearly tradition to have a few companies fall under because guess what? This money we thought was there isn't there, or these sales we thought happened didn't actually happen, and the books are getting cooked over there in a lot of companies, and no one's really questioning it.
Yeah.
I like Chinese food.
I do too.
Cooking the books.
Yes. Well, and I think, kind of to that point when you talk about whether what they're giving out is actually like accurate, it makes me think, why would someone continually invest in Evergrande? You see the videos of Chinese citizens crying that this is all they have and it's all gone. It's now, their stock has gone down 93% in value, and you think, what steps would China make to prevent this happening in the future? Or can you even trust that they would change anything?
Well, these are great questions. And how could something like this happen? As we've seen this happen time and time again throughout history. I mean, we saw it in the late 1980s, early part of the 1990s with real estate in Japan. I think. Oh gosh, what did I read? Like the
Imperial Palace was worth more than like all of California.
Yeah,
or
that's
something.
right.
Oh, wow.
Yeah, it was crazy, the real estate bubble that they had there. You saw it in Holland in the 1600s with tulips. You can arguably say we saw it with tech stocks here in the United States. It's when that mania goes in, and it's called the fear of missing out. People are scared that they're going to miss out on the next big thing. And let's face it, people are kind of greedy. So someone over there sees it, so-and-so is making money, and this is how you make money. And for a long period of time, the average Chinese citizen was just not able to own their own property, to own their own condo or what have you. So when all of a sudden they can do this, well, that's got to be, how you make money. And just prices go up and up and up. And then the money's so easy for an Evergrande that they decide they get too clever that they branch out into areas where they've got no business branching out. And then you don't need too much to kind of slow down in order for the pieces to kind of fall apart a little bit. Now, go ahead.
It just takes a little too much leverage and a little bit of a slowdown, and that's kind of what we saw here in 2007, 2008, is just take on a little more than you can chew and then just have things slow down a little bit. And people have been calling this for upwards of 10 years, especially over the last 2 years, the amount of debt some of these companies were taking on. And the real estate market was hot for a while, but as soon as it starts to slow down, it's one of the three big ways Munger says you can lose your money.
Yeah, without a doubt. So, the way I think this probably ultimately pans out, I think Beijing is going to ultimately have even more control over the financial system as they squeeze out some smaller private lenders and maybe even squeeze out some property developers, and then they just have tighter control over that segment of the economy. I think I wouldn't be surprised if that's what Xi wants.
Yeah, another state-owned enterprise.
Without a doubt. So
you don't
I
see
agree
any
with you.
long-lasting ramifications of this specific situation.
Of this specific thing, I don't imagine it will have anywhere near the financial contagion that 2008 did around the world. I cannot fathom it. Something else would have to happen. But this alone, probably not. I say longer term, the control that the Communist Party over there, the Chinese Communist Party, has over the economy, I think the bigger concern for me is we're going to see, again, the world competing out with, we have two systems. Which one are you going to be on? You're going to be on the capitalist, or you're going to be on the nominally communist? And the Chinese are doing a lot with what the Russians did back during the Cold War, going to some of these underdeveloped areas in Africa and Latin America and Eastern Europe back then, and putting money into infrastructure and what have you. And that's kind of what the Chinese are doing with the Belt and Road Initiative.
Yep.
And I think that'll be the more telling thing what happens is just how much the Communist Party of China is going to actively squeeze out the private sector over there.
And I think we've been talking about it, and we've really seen it the last couple months, I would say, them squeezing out. But I think we're still in the early innings of this story. I think next year will be a big one with the gambling licenses in Macau, and just seeing how willing they are to work with some of these traditional gambling companies. And I think it's going to become more and more strict over there in a lot of these companies. And I see that as really the only sort of risk is just the continuation of pushing out any sort of capitalism in the countries and starting to look at, okay, what companies have a good bit of exposure here and what companies have a good bit of their sales here. And if you can no longer start to extract that money from a country like that, I think that's where you start to see broader issues, but in no way can I imagine this turning into any sort of global financial crisis.
Yeah.
I mean, it sounds like China as a as a country is getting more and more communist, or at least that the region, like you were saying, they're wanting to bring even more in-house, for lack of a better word. So, I mean, is there ever a scenario in which the United States would say we're not going to work with the communist country? I mean, we're so intertwined with China and the production of our goods. Like, I mean, do you ever see a situation in which that would actually happen?
And I think that's part of our question marks, and my question mark at least, and why this is a much bigger. That's the bigger long-term story than what just happens with Evergrande. It's what happens with President Xi. What is his true vision for the future, and where does the American economy fit into that? And I think right now, for me, that's a huge question mark. And it's a question that I don't think we're asking enough, and certainly not asking enough out of our politicians, out of our business leaders. To me, it seems pretty straightforward. There's not a lot of rule of law over there, and they're getting rid of individual property rights, and I would love to see more and more American companies try to figure out some way of diversifying their supply chains outside of China as much as possible.
And I think this pandemic honestly may kind of spur that on. I think we may start to see companies start to really diversify supply chains and maybe even into inventories and start to value inventories a little differently than they had pre-pandemic. So I think it'll be interesting. Again, I think it's the early innings, and it's kind of hard to tell what the answer will be to some of those question marks.
Yeah, without a doubt.
But I guess at the end of the day, the consumer's the one that's going to be eating the cost of the increased labor expenses should they move out of China.
Well, I mean, that's intuitive. That would be what it would be. But if companies move production, say, back into the United States, or into another place that has higher cost labor, it doesn't necessarily mean that the unit good price would go up. It just means that U.S. producers would be using far more technology than they would be full-time employees or human capital. So very easy to see some production moving back on shore with very little gain in manufacturing employment. So that's a very real possibility. So,
it is, yeah.
So
I didn't think of it that way.
So there's a lot of things going on in China right now. I think Evergrande is really just kind of one of them. It's made a lot of the headlines, and for good reason, I guess it made some headlines. I mean, people.
It is a big deal.
It's a big deal, but the bigger deal for me is what Xi is doing right now, what the Chinese Communist Party is up to, the longer term picture of how China works with Western capitalist countries, and what our response will be to it, whether or not it's economic, and I doubt it'll be military, at least right now, at least not right now.
Yeah, it seems like there hasn't really been too much of a response at all.
Acquiescence might be the best way of putting it.
Yep.
Well, Courtney, did we answer your questions about Evergrande?
You did. I feel very much better informed now.
Fair enough.
Yes.
Sam, anything else you want to mention about it?
No, that's all I got.
Well, guys, thank you all so much for listening. We always love to hear from you all. So if you have any comments or questions, please, by all means, let us know. You can always drop us a line at tradingperspectives@oakworth.com, or you can leave us a review on the podcast outlet of your choice. As always, if you have any desire to read more, hear more of what we got to say or how we think, go to oakworth.com and take a look underneath the Thought Leadership tab. Find all kinds of good information there. Isn't that right, Sam?
That's all right.
All right. How about you, Courtney?
Sounds good.
All right. Y'all take care.